Good afternoon, and thank you for attending our webinar today covering Unlocking Manufacturing Money. Just a few housekeeping notes before we begin. We are recording today's session. Everybody registered will receive an email with a link to the on-demand version of today's session and a copy of our presentation slides within the next few days. The session will run for a total of approximately 60 minutes, which includes some time for questions and answers towards the end of the session. If you have any questions throughout the webinar, please feel free to submit them via the Q&A panel on your GoToWebinar console so that we can address them toward the end of the presentation. If for some reason we don't have time to address all of your questions in today's live event, please be assured that we will follow up with you directly following the webinar. My name is Jonathan Smythe. I've been with Shea Global for 10 years as a business systems consultant and have a background in production and commercial management, supplying companies such as Marks & Spencer and Debenhams, to name but a few. I also have 20 plus years of providing IT solutions to blue chip companies, more specifically around the Microsoft Dynamics product family within manufacturing and distribution companies. I'm excited today to introduce our partners, 123 Grants and CATX, who will help us understand some of the potential options for funding your innovation and growth. Just before I do, I'll take a couple of moments just to provide an insight into Shea Global. At Shea Global, we believe that there is the potential for excellence in every business, and our guiding passion is to help customers realize that through improvements to operational excellence. Shea Global have offices located all over the world, and this map just shows you where they are. So we have offices in Toronto, Vancouver, the UK, India, and the Philippines, but we do also have some additional resources in Spain and South Africa. I'm very happy today to be able to introduce Claire McKee. Claire has worked on several government-funded business support programs, actively helping SMEs with their growth plans. In the course of helping hundreds of SMEs, Claire discovered how off-putting finding and applying for grant funding was. Claire founded 123 Grants to help make finding and applying business growth and innovation grants much simpler. I'm also happy to introduce John Horrocks. John provides specialist tax advice in 4 specific tax areas, which cover capital allowances, research and development, remediation of contaminated land, and patent box. John has 9 years of experience with CATX, following 30 successful years in the telecommunications industry. And last but certainly not least, I am happy to introduce Grant Quigley. Grant has been working at CATX for 3.5 years and specializes in R&D tax relief claims, as well as leading a team of consultants for approximately 18 months. During this time, Grant has honed his skill set and experience in submitting successful and maximized R&D tax relief claims. I will now hand over to Claire, who will tell us a little more about grant funding options.
Hello, everybody. Marina, could you move the slide over for me, please? Yeah, I've got it. So I'm the founder of 123 Grants, which makes finding and applying for grants a lot simpler. So it's a fully managed service, and we help schools of small and medium-sized businesses. So in principle, what's a grant all about? Well, the benefits of a grant is there's no need to repay it. It can accelerate your progress on the project that you're working on, or the project that you want to be working on to develop your business further. And typically it can fund between 30 to 50% of your project. There are some grants that are higher. They tend to be very much innovation-led. They're extremely competitive. So it kind of varies very much on what your project is and what your business is. That's for me to match make those two together, really, to see what's a better fit for you. The againsts of a grant, if you've ever looked at the criteria, you'll probably need a bit of a lie down because it can look quite complex. So it's really, it can be quite time consuming applying for grants. And if you are successful, then all monies get paid in arrears. And that's a really important point, because if you're looking, say, if you're looking to move premises and you're hoping that a grant will help you, sometimes you might need to start paying for things before you get a grant. So you just need to bear in mind the timing of it, really. And it's never too early to apply in that sense. In terms of why use 123 grants, of course you could go off and try and find these grants yourself, and that's absolutely fine. But what you'll find is it's quite a mixed up landscape, really, and a lot of the information that you might come across is out of date, and when you do find it, you won't really understand whether it's a good fit for your business and your projects, because it can be hard to decipher. So we kind of take all that pain away, really. We're agnostic, so we don't favour one grant over another. We just look at you as a business and think, well, that will be a better fit, and that actually your chances of winning that grant might be higher, really. So it's looking at the whole picture for you. And we can also speak to grant programme managers to find out things behind the scenes. So I've done this quite a few times for people where I've put certain scenarios to them, which, you know, you can kind of see how that can help, rather than sometimes you being asking a question and it might not be, you know, the right way to ask or the right way to position it, really. So it's giving them a scenario in certain circumstances. And my background is business support, so I've got quite a lot of connections within that arena. So these are just a snapshot of the different grants that are available. All sorts of things coming from all sorts of services. There's things related to going green, to transforming and getting more digitally minded, to even, you know, down to distilleries, down to fabric innovation. There's a real cross section of grants available out there. People always want to know what you can spend the money on. So this isn't across the board, because the grant criteria varies. What one grant says you can spend the money on might be different to another one. But this is kind of broad brush, really. You can often use the grant for purchasing machinery. If you're moving, you might be able to use it to refurb your new building, or refurb what you've got. If you might be putting another layer in on your building, another, you know, to service your growth. You might use it for improving processes. So it could be, you know, when you need to get new software in or licenses, that kind of thing. You can also use it for improving your marketing. So generally they wouldn't use it for spending money on advertising, but it could be used for strategic marketing, website design, brand collateral, that kind of thing. Some grants, they'll let you use it for research and development, in terms of, you know, how are you going to gear up for the project? You know, what kind of subjects do you need to look at in more detail? And sometimes you can use it for materials too. In general, it's not business as usual type costs, so it won't be to pay your staff for stuff that they're already doing, and it will never pay your general outgoings, because it's there to fund a specific project. Okay. Yeah, so just a bit of a case study here about a client that I helped. They tried to self-serve, find their own grant, and they were about to apply for a grant for 20k. I happened to be at an exhibition and started talking to them, got an understanding of what their project was, and pointed out that actually they would be better off applying for a 120k grant, which they did go ahead and they got that. So left to their own devices, they thought they could go for the one at 20k, where actually I made them aware of another one. So no, just a simple conversation meant they were 100k up. So, you know, it's not necessarily that easy to find the right grants, and then to, when you found them, to understand what you could do with them. So yeah, so that's, you know, quite a good kind of way for me to look at the whole picture for you, not just what's necessarily easy for you to find. So how does our service work? It's really simple. Tell us about your project. tell us why it matters, tell us how much you need and how you will spend the grant money, and then I take that information away and go and see, you know, what's available that may suit your criteria. So I'll pass on to my colleagues in a moment, but you can go to my website and book a free grant review. If you've already done that, then I'll be in touch with you anyway. But yeah, so that's what we do at 123 Grants. Thank you.
Hi everyone. Oh, sorry, thank you.
That's okay, perfect. Thank you very much, Claire. And we're just passing over now to CATX and to John and Grant.
Thank you, Jonathan. Yeah, I'm John Horrocks, and I'm going to be talking to you today about the different services that CATX provide, and also the way in which we work as an organisation. Grant will talk through the research and development side of the business and give you some insight into the types of business that we've managed to conduct over the last 11 years, sorry. Okay, so I'm going to put that over. Okay, research and development and capital allowances are the two areas that we're going to talk about today. They're complemented by two other services that we operate, which is Patent Box and ROCL, which is the remediation of contaminated land. They're really important areas, and these schemes are all funded by Treasury and they're administered by the HMRC. The reason why that is important is that the view of the Treasury is that for every £1 the HMRC pays out in benefit, it actually generates £6 back into the UK economy. So it's a bit of a no-brainer, especially in these difficult times that we're presently having. Okay, CATX, as I mentioned earlier, specialise in those tax relief areas, and we've had 12 years of doing this business, starting off with capital allowances, and managed to generate over £250 million in tax benefit for our clients. We've opened recently offices in Vancouver, where the R&D scheme has been a relatively new introduction to them, and we have our offices ourselves. Our head offices in Altrincham in Manchester, in Glasgow, Channel Islands, and in London. We've got about 120 people within the business, and all of them specialise in different areas of the tax services that we operate in. All the work that we do or undertake on behalf of the client is under NDA, and it is all covered by CATX's IP, and any claim that has an inquiry against it is resolved by CATX. We own the full process of the services that we provide. Key to them are having a good, strong, professional group of partners. The ICAEW are really a very important part of our business. We get around about 30%, 40% sometimes of our business in a given year directly from accountants across the UK who are seeking help in gaining their clients the scheme benefits that are available. We work a lot with the IFA, and the other key player is the Law Society. The Law Society recently, the way in which capital allowances are handled changed, and in 2014 the legislation was altered to cover how a property was transacted on in the UK. It's called an election, and that election is all around passing the benefits onto from the seller to the buyer and how that's attributed. Our other partners there, Corona tax-wise, as probably a number of you realise, is Business Insurance Company, Business Doctors, LEP and Peninsula are all major players within in our operation and strategic partners to the group. I'd like now to just pass you over to Grant, and Grant will go through the research and development element of our business. Thank you.
Thanks, John. My name is Grant Quigley and I'm the R&D Tax Manager over at CATX. So I specialise in research and development tax relief. So I guess the first port of call is to understand what research and development actually is in terms of tax relief. So it's the government's way of rewarding businesses that are developing new products, processes, services, or attempting to improve them. As you'll see later on, it's the attempt that is actually gaining the reward. Now, HMRC, they release stats every year on the R&D claims, and their statistics show that only 300,000 claims have been made between 2000 and 2018, which is a massively undersold figure. There should be many more companies claiming for R&D tax relief, but unfortunately, it's a very niche scheme that not a lot of many people know. They also reported that in 2016 and 2017, that only 52,000 businesses made a claim. Now, you might think that those are all statistics, but the reason we're looking at 16-17 statistics is that for R&D, you can go back and claim 2 completed financial periods. So for 18 and 19, those claims are still rolling in. So next up is the R&D tax qualifying guidelines. Now this is what you need to be checking off on a list to make sure you do qualify for R&D tax relief. So first off, we need a project that looks for an advance in technology or science. Obviously, we are trying to achieve some kind of improvement on what is normally available. That doesn't mean it has to be the next iPhone. It doesn't have to be the pinnacle of science or the pinnacle of technology. There just needs to be some sort of improvement on what we would call the average or the baseline. There needs to be an uncertainty in how to find or to get there. And what this is really looking at is the problems involved in that actual project. So you may have to make something smaller and there's an issue with the mechanics, or you may have to code some software in a way that's not typically been done before. There needs to be some kind of uncertainty there. And to follow on from that, there needs to be work done to overcome that uncertainty. Obviously, we're trying to reward the attempt to get to an elevated platform, so there needs to be work there as well. This could not be easily worked out by a professional in the field. So if you're working on a software project and a software developer would find this easy, then you're not quite hitting the criteria for R&D tax relief. There needs to be something difficult about the process. And you can see how these qualifying guidelines start to link in with each other. Also, the answer cannot be readily deducible, which again feeds into it must have been difficult for someone who is a competent professional in the field. And also, it does not use a standard approach. If something uses a standard approach to problem solving, then it's nothing new really. It's just using the same processes that have already been established in the past. So I've just got a list here of some industry examples that we've worked with many times in the past at CATX. And the purpose of this is to kind of demonstrate just how broad the R&D tax relief scheme can look. It really can go into any industry whatsoever. As long as you are hitting the criteria that we've just discussed, really you can make an R&D claim as long as it's concerning an area of technology or an area of science. So some discussion points on the examples of qualifying criteria. Software development is obviously a very popular one, and whilst that industry is constantly moving forward, it's the R&D tax relief that is helping it move forward at such an increased pace. Automation is another very good example of R&D. You're making a process improved on what it has been in the past. You're automating a process, therefore it's more efficient, and how to figure that out is a good example of R&D. Failed and successful projects. This is important because many people think that they have to succeed in getting to a product or getting to a process to claim R&D tax relief. And it's not the case. It's actually the attempts to get there that is attracting that relief. In fact, some of the easier claims to qualify are the failed projects, because you can then make the argument that, well, the advance was so great that we worked to overcome, we didn't quite get there. Innovative recipes, innovative formulas, new materials, and improved processes. These are all great examples of an area you may not think attracts R&D relief, again, because of those misconceptions that it has to be you're working on cutting edge devices and that's or science, and that's the limit of R&D. It's not the case. Again, improved products or environmental products are just some of the niche areas that R&D also touches. So there's a distinction in R&D tax relief between what's known as an SME, a small and medium enterprise, and a large company. So you can see there's listed 3 conditions: staff headcount less than 500, turnover not exceeding 100 million euros, and balance sheet total not exceeding 86 million euros. Now, to fit the SME criteria, you must first meet condition A, staff count, and then either B or C. And if you satisfy those, you can fit under the SME scheme. Now, what that means is the R&D tax relief will be greater for an SME than it is for a large company. So what is it worth? For an SME, you receive an additional 130% relief for qualifying costs. So this would, as a first port of call, reduce the corporation tax bill, or it creates and increases the tax loss. And that loss can be surrendered in return for a 14.5% receipt from HMRC. Now, with a large company or an SME with subsidies, they receive a 13% credit based on qualifying costs that then deduct from corporation tax. So the impact is an after-tax saving based on a 19% corporation tax rate of 10.53%. So SMEs and grants. Now, any kind of grant that you receive can potentially have an impact on an R&D claim. So an SME can't claim the enhanced relief of 230% if they've either had a project which benefits from notified state aid or expenditure which is funded by other grants or other subsidies. What would happen in these 2 cases is they would either claim the entire claim at the large company rate, or they would claim the portion that is funded specifically at the large company rate and the rest under the enhanced rate of 230%. So how does it work from our end? To make a claim, it's filled in on the company tax return. And as I mentioned before, it has to be within 24 months of the end of the period we're looking at. So if your financial period ends December 19 and we're coming up to December 19, we need to claim 17 and 18 before we hit that 19 period. Otherwise, we'll lose the 17 period. So for an example, if a company's made a profit of £500,000 and the R&D qualifying costs that we identify are 240,000, that's grossed up at 130%, £312,000 extra relief. Therefore, you would save £59,280 at 19% tax rate. So another example here, if you were in a loss-making position this time of £100,000 and the R&D costs identified were 240,000, we gross that up at 130%, £312,000. Sorry, 312,000, yeah, extra relief. The loss now is 412. So you've got some options here. You can either carry the loss back if there's profits in the prior period. You can either carry the loss forward. You can take group relief if there are other companies within the group structure, or you can surrender the loss for cash. If you choose the last option, to surrender the loss for cash, you will take the lower of the loss after the R&D. So the loss would be 412,000 once you've taken the extra R&D off, or the uplifted cost of 552,000, which is the R&D cost plus the gross up 130%. In this case, the lower is the 412. That's times by 14.5, and you would get 59,740 cash from HMRC. So a couple of quick case studies here from actual clients we've had in the past. This is a manufacturing case study. They found a gap in their market. Firstly, it was to improve their internal processes and therefore created a product to improve this process. And once they managed to sort out the issues they had in-house and had this process and device in place, they then decided to sell it as an external product. The R&D additional costs were 803, and the client benefit at the end there was 143. So another example in a slightly different set of circumstances, this was an engineering firm. They had already made a claim, but unfortunately their accountant didn't understand the R&D tax relief process, as well as obviously specialists such as ourselves do. So they'd omitted multiple projects, thinking that because they weren't quite on the scope of the main projects, they wouldn't qualify. This was not the case. The deadline was, I think it was about a month ahead, so we didn't have a lot of time, but we actually went in and took the 1,500 original submitted figure, and we got them 27,000 additional benefit back. Right, so if I'll just pass back to John, he's going to talk to you about capital allowances tax relief.
Thanks very much, Grant. Yeah, so just following on, capital allowances, I reiterate, is a statutory tax relief available to all UK taxpayers under the guise that they can condition that we've ascertained and identified the qualifying assets. It can be made against a variety of plant within a commercial property and can cover every type of fixture and fitting and have a value placed against it. The important thing around capital allowances in its initial stages is the fact that all the work is undertaken by our surveyors. So CATX surveyors go to the property and they do a survey of the property and capture all the qualifying information that we require to build a claim. To qualify for the benefit, the property must be a UK taxpayer, it must be a commercial property, and the property owner must have qualifying activity. The reason why I say that is that the property mustn't be under a rental operation. It can only be claimed by the commercial property owner, and the qualifying criteria all has a value against that we will then put into the report. There are every form of commercial property you can think of in the UK we've managed to undertake. We're finding more and more now are having more environmental friendly fixtures and fittings added to them or put in place when they're built. The best types of claims are those where those types of environmental advantages have been put into the building, because they do attract more cost into the structural building, but also the impact that it has on the rest of the planet is well versed. The type of claims that we do can be anything from a retail unit through to warehouses. Warehouses used to be covered under a thing called industrial building allowances. Capital allowances have taken over that mantle, and there are no IBAs anymore. Everything is regarded as a property type and doesn't have to be specific, because it's eligible for all commercial properties. As I mentioned earlier, these are the different types of qualifying criteria: heating, electricity and power, flooring, reception areas, sanitary appliances. All of these types of things have a value dependent on where you are in the UK and the type of fixture or fitting, or the grade of the fixture or fitting is applicable. So we put against the price, against a type of heating system, for instance, biomass boilers are a typical example of late, and they can generate up to £30,000 or £40,000 in benefit depending on the type of heating appliance that is incorporated into the property. These are the four areas that I mentioned, I think, earlier, that do not qualify. You cannot be non-for-profit, a charity. You cannot be a public sector body, so nothing within government you can claim. The property cannot be held in a pension fund of any type, and the property cannot be held in stock, which is plant held trading as stock. And this is particularly applicable to property developers. In all four of those areas, once the property comes out of that ownership and moves into a commercial environment, or a private or a limited company, then you can claim the capital allowances that are due on those properties. And the big advantage of this is that you can make the claim against the current value and not what it was built for a number of years earlier. The most probably complicated part of capital allowances is around property transactions. And in April of 2014 onwards, the Treasury, the government of the day, agreed that because there were so many properties that hadn't had the capital allowance placed against the property, they had to do something about it. So as of 2000, if you've bought the property anytime after 2014, you have to agree an election with the two parties, the seller and the buyer, and how the proceeds of the election are disposed is critical. CATX, with the support and the working relationship that we have with the Law Society, will take ownership of those legal issues and put them into the CPSC, which is the election criteria that we have to work under, and ensure that the capital allowances, A, are captured, and B, they are appropriated to the claiming body. You can, for instance, if you're the seller of the property, you could claim, say, 50% of the capital allowances and pass the other 50% through to the new owner as a negotiating tool, perhaps. And that's why it's so important to make sure that the election is completed accurately and concisely. And as I said earlier, we'll take that on board, and our technical department will look after all of that right through to the property being completed. I've given an example here of a typical case study that is in fact a really profitable and good area for us from a capital allowance perspective, and that is care homes. Care homes are very often fitted out to high spec standards, so they'll include attractive claimable areas such as access and egress, automation, the installation of lifts, etc., all add to the value of the property. And in the case of a care home, it can be anything up to 30% of the property value. In this particular example that I've shown here, it was a £500,000 purchase price, and we identified £93,000 worth of capital allowances that the owner gained benefit from. This actual one that I'm talking about led to a portfolio of care homes that organisation held, and we finished up doing, I think it was 16 care homes across the UK, all of which, by the way, managed to get a very nice claim back against the costs of the capital allowances. Hotels, similar sort of thing here. The types of claimable items include water installations, electrical installations, and again, because it's a hotel, they tend to be high spec. This particular case, over 30% of the actual purchase property price of 15.5 million, we identified as capital allowances. So the client's benefit there was approaching £6 million. Again, that led to a number of other hotels within that organisation being passed to us to do capital allowances against. Working with CATX, what we like to close with is the types of people that you're working with as a company and how we're all engaged. The partner process is an important part of what we do. We collect the initial information, whether it be R&D, whether it be on a patent, whether it be on a capital allowance or even ROCL type of claim. We assess the potential for the tax relief that is available, and that is gathered by one of our industry consultants. We carry out that consultation with the client face-to-face normally, or in this environment these days, virtually, and discuss the types of projects that we're engaged in and the various items and costs that were incurred on either the purchase and or the application or the service that was delivered. Our role, as Grant alluded to earlier, is to make sure we maximise the value of the claim. The schemes that we operate are attractive from a UK perspective, and they're generally accepted as being best in class. Once we've collated the information, we create a report, and that report we take ownership of and submit to the HMRC. If there is any inquiry against that report, we handle that directly. It's not passed back to the client, and we have never, at this moment in time, touch wood, we have never been fined by the HMRC, and we've got now over 16,000 clients who've done business with us. The client, on a successful outcome, gets the payment, and only then do we raise any form of fee. And once that is completed, in the case of R&D, we start then looking at the next claim for the following year. In summary, I mentioned earlier, we've managed to identify over $250,000 in taxable benefit to our clients. We work with our clients and partners to identify all eligible clients that we can claim against and maximize it. Totally risk-free, as I mentioned earlier. It's a no-win, no-fee environment. And our average tax benefit from our clients across the portfolio is approaching £55,000. And I think
Fantastic.
that's all from me. Thank you.
Yeah, fantastic, John. That was it's absolutely enlightening, to be honest with you. Surprising how many opportunities there are out there for organisations today. Thanks also to Claire and Grant too for the information that you provided. That was really interesting. So we come now to the bit that I enjoy the most, and that is the questions that have come in from various different attendees of today's session. So I hope the three of you are ready. Here we go. So the first question is, how long have I got to apply once the grant application process opens? So I'd guess that's probably one for you, Claire, is it?
Yeah, I'd say sooner rather than later. Some grants are very popular and they can get oversubscribed very quickly, and there might not be any notice of that, and then they just shut the door, really, and you don't know if they'll open it again. So it's not, with grants, it's not the kind of thing that they're always around. It's dynamic marketplace. So if there's one that looks as though you're likely to be eligible for, then apply sooner rather than later.
Perfect. Thank you, Claire. And I think this next question from the same person is also probably in your specialist area. And it essentially says, can I claim for items or services already purchased for the project?
No, they'll never, on any of the grants, they'll never let you claim retrospectively. So again, it's kind of trying to look ahead, really. If you have got a project in mind, something's changing, you're progressing, you're growing, or whatever is happening in your business, the sooner you reach out to us at 123 Grants, the better, really. It's not the kind of thing to leave to last minute, because the process takes a while. Yeah.
Okay, perfect. Oh, my apologies. And the next question, do I have to have the matched funds in place?
Well, you have to show that you have got access to the match funds. So it could be that you've reached out to a lending company and they give you a letter of intent. You don't necessarily have to have the money in the bank there and then, but because a lot of the grants are match funded, they obviously want to make sure that you've got the match in place, or you know, to make sure that you're eligible. Yeah, thank you.
Okay, perfect. So the next question is, when will the grant administrators pay me?
Yeah, they're quite good, actually. They're quite quick. So they usually have certain people within their organisation that just manage the grant administration, the invoicing. So they're quite quick. It's usually within, you know, up to 4 weeks at the latest. Yeah.
Okay. And how do I know what makes a suitable project for a grant?
Yeah, it's a bit chicken and egg, really. So that's what we do. We match make, really, going back to that example where the company thought, yeah, great, we found a 20k grant, but actually upon speaking to them, I found a much better one, more suitable for them. So it's just having that extra knowledge and insight, really, and that's what we help with.
Perfect, thank you. So our next question is, this is quite amusing. Do COVID loans affect R&D tax credits? And without confusing you, I think this question is probably a question for Grant the person rather than Grant the process.
Yeah, I think I can field that one. So, as you may recall, I mentioned that the grants can really affect the R&D claims, but in this case, fortunately, the COVID loans won't affect your R&D claim unless it's a COVID grant specifically for an R&D project, which is going to be a very rare occurrence at this stage. So if you've had a COVID loan, then it shouldn't affect your R&D claim at any point.
Okay, and this is a continuation of the same question, which essentially says, can I claim for furloughed staff time?
So obviously you can claim for staff time normally because they're working on the R&D projects. However, if they've been furloughed, then it's HMRC's view that they won't be doing the work as of obviously they're furloughed, so you won't be able to claim for that now.
Okay, perfect, thank you. And the next one I suspect probably is for you, John, and it is, why doesn't my accountant complete a capital allowance claim for me? Why do I need CATX?
That's not the first time I've had that question, actually, and it's quite simply it's because, in fairness to the accountant, they cover all areas of tax, but they do not cover the specific types of taxation that the Treasury operates. And as it's not covered, what happens is that the accountant passes the opportunity, their client detail, to us, and we deal directly with the accountant on that. And that's one of the reasons why we have such a strong relationship with the ICAEW, is that, as I mentioned earlier, everything that is done by CATX is under NDA. We work very closely with the accountant. We build a case, we submit the case into the HMRC with the accountant's support and CT 600 and various account information the accountant shares openly with us, and to ensure that it meets all the regulatory requirements by the HMRC, and results obviously in a successful outcome for them. So
Okay.
quite simply, they do it. They haven't got the staff within house. Yeah.
Yeah, and I guess it comes down to skill set as well, doesn't it, John? So you wouldn't ask a decorator to do some electrical work in a house. It's about having the correct skill sets and to be able to carry out those activities for you.
Absolutely, absolutely. Yeah.
So the next question, does the property need to be owned in a limited company?
I mentioned it in one of my earlier slides, but it is a really important element for us. This is because it can be any type, from a capital allowance perspective, it can be any type of property, and it can be under any type of ownership, providing it's not in a charity, a pension fund, held in stock, or public sector. So an LLP, a sole trader, a PLC, they can all make claims against their property. And in the case of high rate taxpayers like doctors, dentists, professional type staff, they would actually get the benefit calculated back against the property at the high rate tax rate of 40% and not at 19%, which is the standard tax rate.
Okay, perfect. Thank you, John. Now we have a number of other questions here also that are coming in. So this is possibly one for you, John. Is the claim based on company tax paid?
For R&D, it's slightly different because it can be taken cash against losses. For R&D, it is based on the company making a tax profit, and so that they can offset any tax that is owed or is due against the capital allowances that have been generated in the claim. Because the capital allowances can be held in a pool and drawn down against for subsequent years, and if the property is a property that is built in an open tax year, it would come under annual investment allowance. So you could claim it as, in that case, you could claim it as cash.
Excellent, thank you, John. And I think this one is probably your specialist subject as well. Can R&D claims be made on food research and development?
I don't know if Grant wants to pick that up, but
yeah, I can take that. Absolutely. We've done many claims on food-related projects. Again, people think that because it seems quite run-of-the-mill or it seems day-to-day activities that they won't be able to claim. But no, food R&D claims are plentiful. Yeah, there's lots in there that we've done.
Excellent. Thank you very much, Grant. And another, which basically says, if we have received a grant of 20,000 for manufacturing growth, can we claim R&D tax relief?
So that would depend on how the grant has actually been targeted. So if it was specific to a certain R&D project, or if it was non-specific and used within the R&D claim, it'd be used differently. But you could definitely still claim for a portion of it under R&D. Absolutely, yeah.
Excellent, thank you. So I think we have a handful more. Commercial property tax credit. I lease a property for which work has been carried out. I'm in the process of buying the property. Can I claim?
It's John here. Yeah, you can make a claim against that. The work that you've undertaken, you'll have receipts against. Once you become the owner of that property, we can look at those receipts and apply them to your purchase. So in the event that the property is now, or at the point of being transacted, the only thing I would recommend that you do, you need to make sure that you have the election in place with the owner. If you're buying it out of its lease, then I'm more than happy to talk it through with you if you'd like me to do that for you.
Excellent, thank you very much, John. And I think this is a continuation on the same question, which is the property I'm in the process of buying is a 1.1 million pound warehouse. Does this type of property qualify?
Yeah, I mentioned earlier about industrial building allowances. Back in the 70s, 80s, there was a huge, basically, let's say, project build around industrial factories and the likes across the UK, and they come under a thing called industrial building allowances. All of that has changed, and even if this property was built in those times, you can claim now on the heating, lighting and cabling within a industrial property, which wasn't allowed under an IBA. So yes, they're most definitely areas of property that you can put capital allowance claims against. And very often in those types of properties, we do two surveys. We survey it as it is in its current state, and then you can rip the place asunder, put your new fixtures and fittings in. We'll do a secondary sweep of the survey, and that way we can maximize all the capital allowances that were in the building at the time, and the new ones that were added to the property following the work completion.
Perfect, thank you, John. And then I think this is probably our final question for today, and it basically states, where can I find a list of grants available for food manufacturing?
I'll take that one. Yeah, it just really means contacting me, and then I'll kind of do a sweep to see what's available. There's not really a list as such because it's dynamic, so it changes literally week by week. So new things come on board and other things change, or sometimes even the criteria in a grant changes. So that's what I do to help out in terms of making sure that that information goes across is accurate.
Perfect. Thank you very much, Claire. So there was one question that was submitted, which basically asks, what do you charge for your services? what I'm just going to do for that specific question is just to defer that one so that we can take it offline, because we've got a number of different specialisms here, and I think it's probably not the right forum for us to be talking about the charges at this point. But reach out to us, and if we drop through onto the next slide, what we should be able to see is our contact details. So if we can help you with anything, if you've got any further inquiries about the information that we have given you today, then please feel free to reach out to us using any of the contact details on this final slide. And all that really remains is for me to, first of all, thank all of the contributors today. So thank you very much, Claire, Grant, and John, for your time and your expertise during today's session. Thank you for Marina, our head of marketing, for arranging this session. And of course, thank you for everybody that's joined this webinar today, for giving up an hour of your time. And again, I encourage you to get in touch so that we can help you with any queries you may have. I hope you have a great day, and thanks very much for your time.
Thanks very much.
Thank you. Thank you. Thank you.
Thank you.